this. So, all right. So we have Richard. We have your email question of should I invest in Bitcoin? And
oh, that's a great one.
Get one?
Feel free to add. I know you're probably up to speed on the topic.
I don't know much about it, but we have a lot of more clients asking us if they can use it as a source of funds.
Can I buy a house with Bitcoin?
Well,
there are a lot of people that could with how much money they paid off of their Bitcoin.
No, I mean to actually go. Here's a Bitcoin. I want to buy a house.
Oh yeah, no, we don't see that, but they do show us these funky looking statements where they say, yeah, it's and you're like, well, I don't know how we source that. I don't know what we do with that.
Yeah,
that's what it comes down to for us. So it's a good topic. It's a great topic.
It's a good topic. All right, and anything else before we get into it?
I brought in a few things maybe we can touch on, but I wanted to maybe cover the North Bay fires and what that'll do to the housing economy.
Good point.
Okay.
Good point.
And then another one here is what Trump's tax plan might do.
Okay. Oh, that'd be good. You got some good stuff?
Yeah, sure.
Yeah, I'm sure we can
All right.
expand on that quite a bit.
Okay. So what we'll do is why don't we start off with the fires?
Yeah, let's do that.
Yeah, because we aired on Saturday. It happened on Sunday.
It happened on Sunday.
And then we had this week worth.
Wasn't 2
No,
weeks
it was
ago?
2 weeks
2
ago,
weeks ago,
actually. Yeah, but the fallout really didn't. Okay. You guys ready?
Yep.
I think so.
Away we go. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Rob Spinoza of RPM Mortgage, and joining us as a co-host, Richard Davey of Fiduciary Financial Group. Our phone number is 888-912-1190. Use that number to answer the trivia questions for our 5-pack tanning certificate given away during this show, and that certificate is not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is random trivia.
That's always the one I get.
I know. Well, I gotta keep you in suspenders here. Okay, so Rob, we are starting to, at least the fires in North Bay are starting to get contained quite a bit.
Today was cool and cloudy, and so that certainly helps them get a grip on things. But no doubt about it, the ripple effect is going to be quite wild.
Okay, so let's talk a little bit about it. I mean, obviously, our hearts go out to everyone.
Yeah.
In fact, I actually had 2 friends who lost their house.
Amazing how many people just and we see what we saw at RPM was our office is in Mill Valley, but so many of the people that we work with commute from further north.
Yeah.
So not only were they, some of them, nobody in our office fortunately was directly affected, but they knew people who were. And then certainly the workforce felt it immediately because there was just,
everything shuts down.
Everything shuts down, escrow companies, difficult to close transactions. What we noticed directly though, which was interesting, and I think this leads to the broader topic, is we had, and we're just clearing this now, but we had somewhat of a moratorium on fundings because Fannie Mae and Freddie Mac look at that. They say typically in a design, what they'll require is that the lender has an appraiser go back out to make sure that the property is still in suitable collateral, so it's in condition. When you have hurricanes or floods or anything like that, that's usually what you see. And no doubt here, that's what happened here too.
Yeah, what would they do? Like if, in a couple of situations where somebody's house was saved, but the whole neighborhood, is down.
I haven't had this direct experience yet. It's a great question. What we also saw, and you may know more about this, is that some people had difficulty placing their insurance because the insurer was looking at the neighborhood and saying, not yet, until the fires were contained. Because they didn't know if they'd have anything to insure by the time the loan funded. So definitely a very trying situation. And like you said, our hearts go out to the people that have been affected by it. Hopefully they find help.
Well, and then as I understand it too, the advice given to these people is you have to still pay your mortgage.
Yes.
Are there some forgiveness periods? That's what I've read.
There are, and what you want to do is exactly the same recipe for when you're in financial difficulty, and that is make your servicer aware of the people you're making your payments to. Call them, ask them what to do. Call your insurance company. Gather the facts if you can, and that's why it's so critical that people have the resources to do it. They have a place to go where they can make a call and get the information. but recover what you can of your information and get in front of your servicer and find out.
Well, and I called my insurance guy to, because I do a lot of life insurance, but I don't do anything with property and
Okay.
casualty. And so I called my P&C guy, as they say.
Right.
And we went over it and I said, listen, I know you're being inundated with phone calls, not only from people who have claims, people like me who are going, I think I kind of better look at this because, it could be your house could completely burn down.
What your
not just a
existing
little
coverage is? Is that what
Yeah,
you I'm the
exactly.
same way.
I called on the day I heard about this fire.
Yeah.
It's
just
a good
find out.
reminder.
And part of the insurance coverage is, that we went over was if something disastrous like that happened, I do have insurance to be able to cover me to, stay in a hotel.
Get back
or
on your
Lots
feet.
of years.
Yeah.
Lots of
lots
years,
of years,
to stay somewhere, so.
So
And go ahead.
Go ahead, Richard.
I was
please.
just saying, unfortunately, I was talking to my broker as well about this. He said that typically people have 8,000 to 10,000 on a standard policy, paid loss of use, and we know in the Bay Area that's
Wow.
maybe 2 to 3 months. And with the contractor shortage up in the San Jose area, you're gonna have people that
Yes.
are taking 1 to 2 years to rebuild, and they've got 2 months worth of loss of use.
Right.
So
So that begs the question, and I think where you were going with your initial one is what's going to happen to Bay Area real estate, given the fact that we were already in a lot of these areas had a shortage of inventory to begin with, and now
Yeah.
you've got some 5,000 structures that are gone. And these people, what do they do when they go to rebuild? What does it do to housing prices? What does it do to rental prices? We're getting this question all the time. I think that what we'll see, and this speaks to the demographic here in the Bay Area, those that know the North Bay, fires happen north of Marin County where we are. I don't anticipate we're going to see a lot of demand coming back down just because of the economics of it. Housing tends to be more expensive closer to the city, but I do think that towns like Novato will see an influx of people
Sure.
trying to get into properties that are more accessible from further points further north, because often they work down here.
Yeah, and I know we talked about this at Pacific Private Money, that, there's going to be probably a huge demand for loans because there are going to be people who aren't going to qualify for regular loans with a bank,
Right.
and they're going to need that alternative financing.
and quicker financing.
And quicker financing
Yeah.
for whatever reason, so they're getting prepared to be able to do it. And then the nice thing is, I think a lot of people are realizing, you know what, don't price gouge,
Let's hope.
Yeah, I
Let's
think a lot of people do that. So anyway, we're going to cut to our first commercial break here. Again, we're talking random trivia here. What is Lambeau Field's nickname? Lambeau Field. You all know Lambeau Field, football. What is its nickname? All right, it's called something specific. Call 888-912-1190. You're the first caller with the correct answer. You're going to win that free tanning certificate from Tan Bella. And guys, I want to make a quick mention here for Driven Raceway. You guys ever been doing
Why
that?
not?
It is so much fun. It's premier indoor kart racing and family entertainment facility. They have high-speed electrical karts that are extremely safe. Include a helmet and a race suit, just like the pros. They also have glow-in-the-dark mini golf and a little mini bowling alley, so it's great for the kids.
Where is it?
It's in Roder Park.
Great.
They also have one, I think, in Fairfield. And I got to say, you really feel like you are at the Indianapolis 500. Check them out at drivenraceway.com. Don't touch that dial. The best of investing. I'll be right back. All right.
I gotta say that it's glad it's electric because, man, when those things are gas powered, you go into those indoor facilities, you
Oh, no.
When my brother and I did it, when we did one back in Illinois, I walked out of there, I was nauseous. I was like,
They had gas indoors?
fumes,
Yeah,
yeah.
I
with a barbecue and charcoal
Yeah.
to go with it? That's crazy.
It was like NASCAR. I mean, come on. You should be smoking while you're driving.
Yeah. At least NASCAR's outside, isn't it?
Yeah.
All right. That's a good set. That's a good first segment.
We're doing a financial planning day. It's a volunteer day that the Department of Health and Human Services puts on.
Mhm.
And it's coming up in a couple weeks, and it's going to be very disaster financial
Yeah.
planning focused.
Oh, wow.
So stuff like suspending your mortgage or trying to get your mortgage payment suspended for
Yeah.
3 months.
Freddie is doing a forbearance.
Okay.
But you got to call your servicer on that and find out.
Yeah,
You can't just stop
assume
paying.
or
Yeah.
just do it.
So no balance forgiven, but interest rated.
Right.
It doesn't accrue
Right.
during that period.
Do we want to continue on with that part? What do you,
I'd be interested in talking about the taxes.
Yeah. All right.
honestly. I
Let's
think
get
that's-
into that.
Even though it's whatever's on that paper is not what's going to happen. It's
Oh, I know.
yeah. Okay. We can shift
So-
gears. We can always come back to that.
Yeah.
if we want to. Okay.
Why don't you start on this topic then, and then we'll jump in on it. I'm going to highlight some stuff while you're going forward. So maybe just start it off and say, hey, talk about housing or the tax reform and what might filter down.
Okay, yeah, I'll focus it on
Yeah.
that. Okay. Sounds good. Here we go. Well, welcome back to the Best of Investing. I'm Edward Brown, your host, along with Rob Spinoza and Richard Davey. First trivia question: what is Lambeau Field's nickname?
I don't know the answer to this, but I know that the one in Baltimore is called the Jake, isn't it?
It might be.
Okay.
Come on, what's it
No
called?
clue. Permafrost?
Close. The Frozen Tundra.
Frozen.
Frozen Tundra. All right. Well, you know what? The next two questions will be a little easier. We don't want to embarrass you guys.
Okay.
Okay. Hey, before we get into talking about taxes, I do also want to make a mention here. Now, you guys know I'm a man's man, but I got to tell you, the sugary drinks that either
Oh, I
taste
thought you were going to say
nasty.
you got a manicure.
No.
Yeah.
Sometimes. So those energy drinks that either taste nasty or have too much sugar and crash afterwards.
Yep.
So you know what I actually like to drink, and it's in a pink can, and it's called Go Girl.
Oh, wow.
I'm really serious. Okay, and I love it because it's sugar free, and it's one of the few drinks that I found that actually gives me the energy. Has no sugar, and the best part, it tastes great. It only has 5 calories.
Try taking that into the bowling alley, or
No, I don't do the bowling alley. No, seriously though. I would take it into the gym and drink it before.
Oh, yeah.
But
Put it in a koozie.
yeah.
you can get it at most grocery stores, and it's very reasonably priced too.
There you go.
Check that out.
Okay,
That's
cool.
Go Girl energy drink. Okay, so
I think it's great they're advertising.
it's good. I mean, I called them up and I said somehow someone said, "Hey, Edward, you should advertise for these people because you like their drinks." I said, "Okay, I'll call them up."
Yeah.
And sure enough, they said, "Sure, go ahead." So, Richard, let's talk with you. Let's start off with you about a little bit about tax reform.
Yeah.
Because El Presidente is making some suggestions, isn't he?
He is, yeah, and I'm by no means an expert on the proposed changes. I did read his couple-page tax plan that he put out, which it's at least a start. The big one that people are talking about is the repatriation of cash, the kind of tax holiday for corporations, and also the 20%, maybe 25% corporate tax rate.
Oh, okay, yeah.
And then obviously the other big one that you could argue is kind of a thumbing of your nose at the blue states is the elimination of certain itemized deductions that really benefit the blue states primarily.
Yeah, state taxes, property taxes, yeah.
And that's all the coast, like California
You got it.
or
Well,
Connecticut.
right here.
Area,
The
Each
blue
year-
rim.
Each year, taxpayers subsidize America's homeowners by roughly $70 billion, with the benefits flowing disproportionately to coastal areas with high incomes and pricey homes.
Yeah.
And the standard deduction he talks about going to 24,000. I mean, that's going to cover
For a couple.
for a couple.
Yeah, married couple, right.
But that's going to cover for a lot of people what their mortgage interest and property tax deduction would have been. So it's really the Marin counties of the country that are going to get hit the hardest.
Yeah.
Because their mortgage interest and property tax are still in excess of that 24,000.
But here, it's kind of interesting because I think about California being a very liberal, and yet in theory, California, the average liberal Democrat should say that's a great idea. Make the standard deduction high and take away that, because that'll help poor people. Forget red and blue states; it'll help poor people so that
Lower income,
the whole idea is redistribution of wealth, and this is one way to do it. Now, I'm not necessarily in favor of it because I'm as conservative as they come, But anyway, I thought it was kind of interesting to see it is kind of, it seems like it is kind of a way to sort of thumb his nose,
You could argue. The other area that's blaringly left out, or at least I haven't seen it, if it's in there, shame on me, but pension reform. You hear, hands down, the most unnecessarily complex area of the tax code is the ERISA code. How many different IRAs are there? How many different 401k and pension plans are there? It's absurd,
Right.
and it's man-made, and it creates a lot of unnecessary high brain powered individuals focusing on stuff that's man-made.
Right. Years ago, they had come up with something called a SAR-SEP, which is a salary reduction simplified employee pension. I set that up
Super simple.
It was awesome. It was incredible.
And what did it get phased out, or?
Yeah. Oh yeah. Yeah. They just looked at it. They go, "Yeah, this is a little too good." And
Yeah.
so suddenly all my great clients who we set them up for, I mean, they didn't grandfather it in. It was like,
Right.
it's done, it's done.
Well, what do you guys think? I mean, I'm very real estate centric, but what do you think the impact of that is if you if you get rid of the itemization of deductions for mortgage interest, or you scale it back, property taxes? Where do you see that going with housing prices in general, and then what sort of effect does that have on the entire banking system? Are we going? Do you feel we're going back to some sort of real estate retracement in terms of value? And do you think that's even on their radar?
I mean, I'll jump in here. I think, you know, when some people are looking at the fact that they're renting and they're looking, you know, and the realtor is trying to say, well, if you buy a home, you're going to be able to
Tax
deduct
benefit.
it. Yeah, and
Right.
so they kind of look at how much am I paying for rent versus how much I'm paying for a house. Forget the appreciation part,
Right.
because if you're renting, you don't get the appreciation. But I think that's kind of a major thing of what
But how
people can
about-
afford.
Okay, so and I'm by no means a tax expert, but how about when you start talking about coastal areas like New York, like California, like where we are right now? Don't you start seeing a lot of those tax benefits phased out with the loan sizes and AMC in
Absolutely.
general? So does anybody know what the net benefit of detriment of this tax plan would be? I mean,
I
nobody
think
knows
you
anything
can,
about it,
you
right?
can't calculate that
Yeah.
very easily, but
But are we focusing on the right thing is what I'm trying to get at when you say okay, or when they maybe look at this like I'm gonna get these coastal elites and show them, you know, is it really
No, that's a very good question, because it's the same thing with like when Justice Roberts was the deciding vote for
Right.
Obamacare. It was like, well, let's just figure it out. Let's try it and see what happens. And if Congress doesn't like it, they'll change it. It's like, whoa, wait, but that's not necessarily the smartest thing. Or wasn't Pelosi the one who said, listen, how are we going to know what's in it? How are we going
Right,
to,
right.
we have to pass it first and then we'll know what's in it.
then we'll read it.
Yeah, then we'll read it. It's like, yeah, that's probably not the best way to handle politics. So I don't know if they, like Richard said, I don't know about the calculation of that.
Well, I think that's the one thing. So when we start looking at home ownership, that's what everybody has to look at individually. That's my point.
It could close the gap between, I mean, I think there'll always be a coastal versus
Right.
inland home price gap. But this could narrow it a little bit. You have that. You also have things like telecommuting being more viable these days,
Yeah.
where you can live interior and still work in a coastal job.
Okay, hold that thought. We're going to come right back here. Okay, and what movie gives Jack Nicholson the chance to yell at Tom Cruise, "You can't handle the truth"? What's the name of that movie? All right, 888-912-1190. Don't touch that dial. We're going to be right back. Sorry, I just realized the time.
Yeah,
sorry about that.
No, don't apologize. It's up to me to basically gotta go.
Is it the grant?
Yeah. No.
That's wrong.
No. It is.
Something gentleman.
Yeah.
What's that one called?
I can tell you guys.
Yeah, he won't say- he won't-
This is exactly what I want for the listeners.
Yeah.
Because then they have to channel surf. They go,
Yeah.
"Oh, what is the name of that movie?" And they're afraid to turn, and they come back and go, what was the name of it?
Something gentleman.
No, you're thinking officer. Gentlemen.
Yes, I am. That's not it either.
though.
I haven't got one of these yet. Well, that's 2 shows.
I would think that you'll probably get the last one.
Don't know
All
birds.
right. Was there anything else specific? Because we also want to make sure we get your emails.
No, we'll go to questions. Then we'll
Okay.
branch off of that.
All right.
Yeah, it's on the tip of my tongue, and I can't think of any of the movie. I can see it in my mind's eye. But...
It's the one where they're the Navy guys,
Yeah.
right?
Something truth, right?
You'll
Ah!
you got to pull a Homer Simpson. Here we go. Welcome back to the Best of Investing. Edward Brown here, along with Rob Spinoza and Richard Davey. I tell you, the audience,
I'm on the
everyone's on the edge
of my seat.
They just couldn't remember the name of the movie. What movie gives Jack Nicholson a chance to yell at Tom Cruise, "You can't handle the truth"?
I haven't had my 5th cup of coffee today, so my mind isn't entirely sure. It's on the tip of my tongue, and I can't.
I'll start it, and you guys can
Yeah.
finish it.
Good
Good
man.
man.
Ah,
Yeah,
I knew it.
Oh, all right.
It's a gentleman. That was.
Yeah, you're close.
That's close enough. All right. Hey, guys, let's go right into email time. We got a couple of great emails here. First of all, Richard, this is a great one. Should I invest in Bitcoin?
Oh,
Well, ask Jamie Dimon first.
he says no, right? He
He has nothing to gain by saying that, by the way. And no big banks have ever committed any fraud in the past little bit. But
Well, before you jump in on that, I just want to say that we have seen a lot more borrowers coming to us saying, "Can my down payment come from Bitcoin?" Or what? You know, we will ask them for their funds to close, and they'll say, "Oh, it was in Bitcoin." How do you document it? So maybe take it.
Well, or there's, can I pay in tulip bulbs?
so
I haven't heard that one yet, but now you know.
A lot of people are calling this tulip mania because of the astronomical gains.
Yeah.
Bitcoin's up as of yesterday 481% this year. It means $1,000 now $4,810. Sounds crazy.
Right.
Here's why I don't think it is. I just did some quick math on the M2 money supply, which is kind of like the main money supply of the US dollar, Japanese yen, Chinese yuan, what am I forgetting? The euro and the pound.
Okay.
That's a $40+ trillion currency market. And the market cap of Bitcoin right now is about 98 billion, 0.2%.
I'm surprised it's even that high. But
So when you look at people saying, "Oh, it's up 481%," you know, things make new highs all the time. Currency is a very interesting market because there's so much upside. It all has to do with what's the user base and how much market share can Bitcoin take.
okay, but here's my question on that. Why couldn't you invent the Richard Davey currency?
That's a great point. So there's no barrier to entry to create your own
Yeah.
cryptocurrency. There's hundreds of them.
Well, by way of saying there's no barrier to entry, that means there's a tremendous barrier because you've got to gain acceptance.
There's no Facebook barrier to entry either. It's the community that makes the value. It's
Right.
Yeah.
Every currency in history, its value has been the community usage of it.
Yeah,
Right.
exactly. In fact, I always wondered, like, you know, why is gold? So, I mean, in the old days, maybe it had utility, you know, gold teeth and all that stuff. But now there's so many plastics and all these other kind of things that can fill in. And what I had heard was the fact that it's small enough that you could carry it around. It should transport, and you could, you know, you could. It was soft enough that you could,
Valuable.
you can make things specifically and make coins out of it. Versus you know, like heavy rocks,
granite or something.
Granite, marble, you know,
Yeah.
and you can't carry around 50 pounds worth of that,
Yeah.
right?
Look, I don't know anything about the currency markets, but I find it fascinating that it's exactly what you talk about. It's that when you start hearing it, you start wondering, like, where is this thing going? You know, and what sort of acceptance will it gain?
Well, and what would cause it to go back down to 1,000?
Regulatory risk is by far, or a security hack.
Or
But-
what about people just saying, you know what, I just don't want to deal in Bitcoin anymore? I mean, because basically it's like if I let's say an accountant provides tax returns, and he says, sure, I'll accept Bitcoin, right? Well, that's kind of in theory.
Would have been very smart.
Yeah.
So is there also forgive my terminology, that too. Is there a MySpace element to this thing? Could Bitcoin be?
Yes.
Facebook? Okay.
Yes. So there are not a million.
Ethereum, is that one of them?
That Ether is the currency of the Ethereum.
Well, hold on.
See,
the stuff you smell.
No, well, Ethereum is it, but he's saying that.
Yeah.
He's just explaining how.
And full disclosure, I own it. I own Ethereum.
All right, get out of here.
Wait, what is Ethereum?
Ether is another cryptocurrency.
Yeah.
Okay, to me, Ether is the stuff that puts you to sleep.
Yeah.
And Ethereum would be like
that's what we're doing to our audience.
So I use this analogy with every client I talk to about cryptocurrency, that Bitcoin could be the next Facebook or the next MySpace.
Okay, good.
What's not going anywhere?
Which, by the way, for the audience, MySpace used to be the or beta. I'm still waiting for the Betamax to come back. Or VHS and 8-track. I still have my 8-tracks. You're too young to remember.
Yeah, he is.
Not that young. I had a MySpace account.
Really?
So talk about that a little bit more though. So you were just saying, you talked about MySpace, Facebook, and then you said something else about Bitcoin.
So there's just a lot of risk of another competitor cryptocurrency coming in and gaining broader acceptance.
Yeah.
The big issue with Bitcoin, other than the U.S. government, let's say, outline it, or China outlawing cryptocurrency exchanges, which they just did. Japan, by the way, just recognized Bitcoin as a legitimate currency,
yeah.
and that's when it really started to pop.
Sure.
Aside from that, the real challenge Bitcoin faces is processing rate. The way it works is everyone in the community gets a copy of the ledger. Everyone knows all the transactions that are going on, and that's actually what gives it its power. It's called an open source ledger. It's very hard to run a lot of transactions if everyone's constantly getting a copy.
And as that network grows larger, it's going to become harder to do so.
It's going to require better chips, which is a reason why a lot of the computer processing chips values are going through the roof.
Right. So now you need more processing power.
You got it.
Yeah.
And that's the store of value.
You open your platform to additional risk. Comes potential for hack, like you said.
I'm going back to the Native Americans with shells.
Wow.
That's all I know.
People say, what's the utility? So great point. People say it's a bubble because you see all these people who don't understand it invest in it. 100% true. There are a lot of people that invest in it that don't understand in it. Yeah. I don't understand it completely. Okay. But there are 9 times many people who are not investing in it because they don't understand it.
Okay, gotcha.
So just something to think about. There's both sides. You could lose all your money, but the upside potential is enormous, and that's why people are taking the risk.
We do know that, I do know that a client of mine a couple of years ago now, in fact, he bought a property. He came in with $400,000 in his checking account, and I asked him about that. And sometime in the past, I mean, totally legitimate from our perspective, but sometime in the past, he had made that money off of Bitcoin.
Yeah.
So it just,
but again, it's just like buying a stock. It's just buying a stock.
Yeah,
and that,
it was the Apple.
He wasn't actually, it was like
in
buying
that
Apple.
sense, it was right, and then he converted it to a cash equivalent, and that's what he used to buy a house.
But as you mentioned, its only value besides being able to trade is the fact that if you're willing to accept Bitcoin as currency for your services,
right?
I mean that's what. If I understand it correctly, that's what it comes down to. Hey guys, cut to another commercial break here. Now this one, I think you guys, if you know a little bit of history, here we go. What famous ship sunk on May 7th, 1915, which ushered us, being the U.S., into World War I?
Oh, got this one.
There we go. We knew we went. Winner, winner, chicken dinner, as they say, right? Okay, Richard knows this one.
Starts with an L, I think.
Yeah.
Don't tell you anything yet? Okay. What famous ship sunk on May 7th, 1915, that ushered us into World War I? And by the way, you have to name all the passengers. Okay. Don't touch that dial. The best of investing is going to be right back. There was actually a joke on that.
Yeah, that's what it is.
There's a joke that there are these 3 prisoners, and the warden basically, let's make it, rather than making it a racial thing or anything, it's like he likes 2 prisoners and doesn't like the 3rd one.
Got it.
So he asks the prisoner number 1, he goes, what famous ship sunk in 1912? He goes, oh, Titanic. He goes, okay, good. And he asks the second guy, he goes, okay, well, what month did it sink? He goes, oh, it was in April. He goes, okay. So he asks, no, I'm sorry. He asks number 2, he goes, how many people died? He's like, it's 1,515. He goes, that's correct. He asks the third guy, he goes, name them. You don't want to let him go. But I have a little story with the Lusitania that I believe is true, and we'll get it to your question, Rob. It's going fast. You guys are doing great.
That's why I thought this would be plenty, because it really does go so fast.
Yeah.
That is a great question. I mean, you go off in a million different directions. That's why
It's fascinating.
Yeah.
And if you want to feel intellectually inferior,
Oh yeah, talk to those people.
I'll bet.
the engineering minds behind it.
Here we go.
Cool.
Well, welcome back to the Best of Investing one more time. I'm Edward Brown, your host, along with Rob Spinoza and Richard Davey. Third trivia question. Richard says he knows this. What famous ship sunk on May 7th, 1915?
I guess the Lusitania.
That is correct. I'll tell you a quick little story that I had heard. Apparently, Germany knew that. But by the way, it was a passenger ship,
Right.
but it did carry munitions.
It carried
It did
munitions.
carry
That's right,
munitions,
yeah.
right? Germany knew this. Germany tried to get the word out. Don't go on the ship because we know there's munitions and we're gonna bomb it. This is a story I heard. I can't back it up, but it's an interesting story.
That's all right. The president was back.
Thank you. The story, and I guess someone could check this out to make sure it's true. every major U.S. newspaper would not print the story
Oh.
except the Iowa Times. So if you go back to the Iowa Times in sometime in 1915, there'll be an ad from Germany saying, "Don't go on this."
Nobody believed it because
Nobody wanted to print it, whatever. And again, we weren't in World War I yet. And sure enough, when the torpedo hit, that thing got blown to smithereens. So there really was munitions on that ship. But unfortunately, the poor passengers, they didn't know. They were just, innocently being traveled.
Well, you got to remember too, back in 1912, information didn't travel at the speeds it does now. So how knows it would be 1915?
That's right. A little bit better. That was the Titanic you're thinking.
Sorry.
Okay, Rob, an email question came in for you that was really good here. It says, I am retired and have a lot of assets, but not a lot of income other than my Social Security and IRA distributions. Can I qualify for a loan?
Yeah, you can. And something like this, assuming that you can't qualify with those sources you mentioned, so your Social Security, the distributions you've been getting, any other pensions or anything like that. One thing we've been able to use lately, especially here in Marin, here in high cost areas where you have a borrower portfolio, whether it's investments or retirement accounts, you can asset deplete those, or you can what we call asset utilization or asset depletion. And what we do is we take a formula off of the value of that portfolio, and we kind of look at it like an amortized loan. So I'll give you an example. Let's say someone has $1 million after they make their down payment, after they meet the reserve requirement on the loan, which we can talk about on another show. We have a program that will take that at 3% for 30 years. Whatever that payment is, they count that as income. So you can use that to help supplement your existing retirement income sources, or you can use it to replace, or create income that doesn't exist otherwise. Now, and when you do this, is you're probably going to have a slightly higher interest rate. The reason for that is it's not a qualified mortgage. It's a non-QM loan. It doesn't meet Dodd-Frank's traditional characteristics for ability to repay. And that's a fancy way of saying that we in the industry have to be extra cautious when making these loans, because our regulators could come back and say, well, this guy didn't have a steady paycheck. He didn't have a W-2 or whatever. Therefore, you proved income through an alternate source. Yeah. And because of that additional risk, we have to charge an additional premium for it. So you do see these rates tend to run a quarter, sometimes a half higher than you could otherwise get. But we've seen borrowers use these to great effect, because if you have a lot of money, but you can't, it's like buying $1 million house here.
Low basis stock.
Yeah.
Yeah. You want to borrow against it.
Yeah, I mean, and sometimes the reality is, you know the value. If you pull money out of a retirement account and you're living off that income, I mean, you erode the principal, and then you erode the earning potential in the future. So we just look at it like, hey, don't do anything with it before we leave it alone. We'll give you a hypothetical income stream for it, and that's how you qualify for the loan.
And as long as the interest is still deductible for now, that'll
right. Well,
and when they can earn tax deferred interest in their retirement and use
So we call these asset depletion, asset utilization, amortization, whatever you want to call it, but that's what you want to ask for.
So question, because I invest people's money, right?
Yeah.
If you have a client A has 100% in stock, client B has 100% in 20-year treasuries. Mm-hmm. Is the client B with 20-year treasuries going to be able to borrow more against their portfolio?
No, not in this case.
Okay.
Yeah, we're not looking at.
Good question.
So we categorize assets into basically 3 groups. So if it's a retirement account, we discount it a certain percentage if the borrower is not a retirement age. If it's an investment account, stocks, bonds, mutual funds, ETFs, whatever, that's discounted typically at 30%, so 70% value, and then cash equivalents are 100%.
Okay.
Yeah.
And before I forget, we're going to get back to Richard in a minute. If people have questions about getting a loan,
yeah, give me a call. So 415-367-5959. I work for RPM Mortgage in Mill Valley. One of the other ways people find me very often is they just search for a mortgage broker in Marin County on Yelp, and I come up number 1 there.
Oh, very good. Okay, and Richard, we forgot to ask. Your email question happened to be about Bitcoin, but you do other things than just invest in Bitcoin. And you work. Tell us, who do you work with? For
So I started my own investment firm with a partner of mine. It's called Fiduciary Financial Group. It's in Santa Fe as well. Easy to find. We're an independent shop, meaning we're not attached to a bank or investment product.
Good for you guys.
Yeah. That's smart. How do people get hold of you?
Phone number's best, 415-785-3778.
Okay. Can they email you?
Email me at richard@ffgwealth.com.
Financial Group. Okay, very good. And I just noticed in the paper today, Jerry Brown is trying to lure Amazon with a pricey financial incentive. So it's so funny, California is so terrible at driving business away because of high taxes and regulations and all this.
Right.
And thank goodness Jerry Brown is coming to all of our senses, so to speak, and he's going, you know what? If we can get Amazon to build something here in California, that would be good.
Just look at what Tesla's done to Reno. That's all you have to do if you want to look at a mortgage market or a mortgage, real estate market that's booming because of that.
Yeah, and it's not just it brings a lot of jobs, and it's just really really good for the economy. So they're going to be trying to woo Amazon with tax incentives. It's so funny. Tucson what they did was they built a 21-foot cactus. They said, here guys, here's a 21-foot cactus.
So to side with the cactus for a second, not that I'm trying to sell out the Bay Area, because believe me, I think it's the best place in the world to live, and I live here myself. But those companies, they have to go back to their constituents and they have to say, hey, your good news is you're going to San Francisco. Bad news, you're going to have a hard time buying a house. Because of our inventory, because of our prices and all that.
Well, I don't think they're going to build in like downtown San Francisco.
No, I know.
They'll build in outlying areas, probably.
Okay, but that is exactly what we have to be sensitive to. Is when these companies make those choices, that's one of the things they're looking at, and we have that challenge. But it's also a good thing. But it's
it's so funny when I hear people come from Nebraska. And they go, man, I can't believe it. I got a raise and I'm making $45,000 a year. And then they go, yeah, I can buy a sandwich with that.
Here in the Bay Area. So it's interesting to see them do that. I hope they come here though.
Yeah. Well, we have a little property in Nevada that would fit them nicely, off of Atherton, that would do nice things for Nevada property.
Oh, that's true. Yeah, you're absolutely right.
What's the? You think about Around or
there's the Fireman's Fund campus.
Yeah. Oh, that's right.
Was the largest employer
yes.
in Marin County.
That's right. Was it 800,000?
I don't know.
It's giant. It's very empty.
Yeah, it is. There's a big talk about Google coming in, but everyone kept saying that's a rumor. But I think that Amazon's looking more for
probably is saying that.
Yeah, really. Yeah, that's right. I think Amazon was looking more for like a distribution center.
Oh, okay.
I think.
Okay. Yeah, so that would be outlying for sure.
Yeah, because it would be not only that, because they only want to see all the trucking thing. That's one of the things that Governor Brown was saying that was really smart. Was they're talking about the infrastructure and transportation, because you're going to need all these trucks to deliver all this stuff.
Most of it's coming to my house.
My
wife is on it.
Oh, you think so? We have. I think I looked at last month. I think we had more than 50 transactions to Amazon. That's almost 2 a day.
I don't think that's the record.
Thinking about investing in cardboard.
You know what? I heard someone say that. Yeah, that's so funny that you bring that up.
Yeah, but I think it's just so it's such a small inkling of what you can make on cardboard. Anyway, don't touch that dial. The Best of Investing will be right back for some closing comments. All right. I do want to say about one deal of the week that I got.
Yeah, I can't name tickers on air, but I bought International Paper because of that a while ago.
Oh, really?
Yeah, because cardboard boxes are.
I just don't know.
That's what I thought.
Where do we even know where they get the boxes?
I didn't make that up.
I don't know.
I was thinking about that today because our trash pickup is on Friday. So every Thursday night, I have to go out there and break down about 1,000 boxes. So I'm like, where are these boxes going? So they're going to Jacoby in San Rafael, right? First. And then are they getting shipped over to China? Where they're turned into new boxes?
Maybe.
Somewhere they turned into.
Because cardboard is a lot of recycled material.
Yeah.
I mean, that's why it's brown. So, but I just don't know how that works. But sure.
All right, let's do a deal of the week here. Then we'll see what else we got. Well, welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Rob Spinoza of RPM Mortgage and Richard Davey of Fiduciary Financial Group. I love that. Okay, hey guys, so Mark Hanf isn't here today, so I'm going to give a deal of the week. So there is a repeat borrower, which is always good. And this guy is buying a property from the bank. So it's an REO property. Now, it was a nice discounted price, but how long does it take a bank to decide on selling a property. I mean, it takes them a really, really long time. And then once they decide, it's like now they're giving you like 10 days
they
to
gotta
close.
hurry up.
It's just, it's really ridiculous. It's ridiculous. So this one gentleman is having a hard time. You know, he actually had his broker all set things up, so he didn't need private money. And then it took so long, this broker just couldn't do anything for him.
Mm-hmm.
So the deal is the property, when it's fixed up, and it doesn't need that much work, but when it's fixed up, it's going to be worth between $1.4 million to $1.5 million.
Okay.
He's buying it for, well, if in today's condition, it's worth about 1.1. So
Okay.
he's only going to put about 70 or 80,000 into it to make that extra
Got it.
couple hundred,
Got
which is
it.
smart. His purchase price is $976.
Okay.
So he's right now he could just buy it and flip it,
Right.
okay, and make a couple hundred, but he'll make 400,000 to put the money in.
Right.
So the thing is, he's got cash. So he's coming to Pacific Private Money for a loan of only $634,000 because he's got
He's got the
310,000
300
down.
grand.
Yeah.
Got it.
So the loan to value for Pacific Private Money is 65% of purchase,
Right.
and it's going to be about 44% of
After-
after repair value.
Yeah.
And it's a repeat borrower. It's smoking hot.
Great deal.
Great deal. And so the guy's paying
So-
9.5%, 2.25 points.
Okay, so 9.5, and how long do you suspect he'll carry that loan for?
Well, he's guaranteeing a minimum of 3 months.
Okay,
And it's a 1-year loan.
1 year loan. Okay,
Yeah.
so he's going to do all the work in 1 year, have it ready.
Yeah.
Right now.
I mean, in looking at the pictures, he probably
He can
only
find a
needs to do
contract.
like paint and carpet and just a little bit of
Yeah.
little work on the kitchen.
Yeah.
Very minor. And it's in Southern California, and so anyway, what happens is that Marcon puts this in the fund, and so the investors are going to reap the yield, and Mark splits the points with the fund. So that's why he's able to pay close to 8% even after he takes his fee. And you look at that kind of loan, and you say that doesn't seem like it's that risky.
Yeah.
And if he even has to foreclose, then the fund will generate even more income, which is actually what happened. The fund actually did foreclose on 2 properties. On one property, they're making
Okay.
50 grand. So it's actually the best thing that ever happened was for default to happen.
Okay,
And then on the other one, they're anticipating another small profit. So
got it.
is it risk free? No. But is it risk averse? Yes. So it's very conservative.
Is it more risky than an intermediate term bond fund? No.
I wouldn't think so, no, because
I would argue no.
Yeah, you don't have the interest rate risk. The principal doesn't fluctuate.
Yeah.
It stays the same. And in fact, one guy who he invested $400,000 like a couple of years ago, and then he's got some other investment opportunity. After you're in for a year, there's no prepayment penalty, no early withdrawal penalty. And he called up and he said, "I need my money."
So
Okay,
this
2 weeks
this
later,
was an investor in the
that's
fund.
he needed his money, so
Right.
he got his money. So it's very easy to get out of the fund too, because a lot of people go, "I don't want to go into something I can't get out of." Well, here, it took less than 2 weeks to
Yeah.
give him his money. Because the thing is that if the guy waits enough time, he gets a full month's worth of interest. But if
Right.
he gets out too early, then he forfeits the first 2 weeks of interest.
Right.
So it's like, hey, you got your choice. What do you want to do?
Right.
Because I'll stay in for the other 2 weeks. I want the full amount of interest. So if you are interested in investing in the Pacific Private Money Fund, you can call Mark Hanf at 415-883-2150 to learn more, or just go to money.com. Guys, you know what? We got to cut out for the day.
Cool.
Holy smokes. Okay.
That's fun.
So, that was actually a very good show. All right, here we go. Here's our thoughts for the day. Life is about moments. Don't wait for them. Create them. I like that. And shoot for now, this is something that I kind of said. Shoot for the moon. Even if you miss, you'll land among the stars.
Nice.
Now, this one was actually Les Brown, the band leader, but that's what I said. You aim high, and if you miss, you're still going to get higher than you were before, right? So thank you again, Rob Spinoza of
pleasure.
RPM Mortgage, and
Yep.
Richard Davey of Fiduciary Financial Group for joining us yet again. Tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long. Perfect. Right on the
That
money.
was so fast.
I know. It do go fast. Now that